Hey, it's Sean Reddy, Keller Williams Reddy Group, and we have the latest edition of our super in-depth look at the Denver metro housing market. This is the week ending September 12th, 2023, and you can see we're looking at a lot of numbers and a lot of colors here, and just kind of an overview of what we are looking at are about a dozen and a half metrics measured week over week, and the colors that you see. Best way to explain this is that the deep reds on the far end of the spectrum, that is hot for sellers, whereas the deep blues that you see, more favored to the buyer's side. So if you're watching this video, the intention here is to look in depth, especially for my high analyticals, at what the Denver housing market looks like week by week, so that if you're considering entering the market, you know what the timing that may be best for you could look like. So let's get into the metrics here. First thing that we're going to look at, and I'm going to have to move the screen around a lot because, as we get deeper into the year, obviously we're doing more scrolling down, and I don't want to shrink these numbers too much. So let's look at odds of selling. And it's important to know where we've been to know where we're at and where we might go. You can see where we started the year, odds of selling, simple relationship between supply and demand. The hottest markets are, you see odds of selling in the 60 to 70+% range. You can see that's exactly where we were late in the first quarter, early in the second quarter, with these numbers peaking out around 67%, with a pretty steady gradual decline from there starting in May. Currently sitting just shy of 50%, 47.5. It is an increase in over last week's number. Remember, last week had Labor Day in it, so a lot of the numbers from last week were more of an anomaly that we found and not so much of a trend. So if you watched this video last week, I did mention that, yet we'll see how the numbers do stack up. Next number we'll look at, average daily active listings. That tells us on any given day in the past week how many properties were on the market. Bottom of the inventory levels were in the mid 3,000s, and it's slowly, well, I'm not even going to say slowly, it's gradually gone up from there. An average of 6,200 properties on the market in the metro area any given day last week. By the way, I want to take a minute to thank First American Title. They are the ones who put these awesome stats together. So thank you, First American, as always, for providing us with this data. Our job is to simply interpret it for you, the viewer. Okay, new listings. This is how many properties hit the market in any given week. You can see where we started the year. Where we saw the most amount of listings so far was in early June, pretty much all of June. I'm going to say May and June kind of average in that 1,100 range. Last week, we saw the rise of new listings come back. You can see we've been at 1,000 or less for about 7 8 straight weeks. Last week, 1,244 properties hit the market. That is the highest since the second week of July. So great news if you're a buyer, you now have more options to choose from. All right, back on market, expired, withdrawn. That's simply a measure of properties that fell out of escrow, properties that came off of the market. Either they didn't sell and their listing period expired, or they just chose to come off the market. I don't spend too much time there unless there's something super significant, which there's not this week. Pending sales is a biggie. That is one of the most important metrics. That's going to tell us, obviously, how many homes went under contract on any particular week, with the number this week being 816. That is a jump from 646 the week before. Again, that was Labor Day week, so pretty consistent, still slightly lower than the previous 4 weeks, 6 weeks, previous several weeks. And we do expect that number to kind of start tailing off towards the end of the year here as less buyers are in the marketplace. Number of closed properties, you can see we started the year in the 400 or 500 range, got all the way up to 1,000 plus a few times. And last week was 606, almost the exact same number as the week before, so no change there. The next measure here, predictive MSI, does stand for months supply of inventory. This is pretty telltale too. Another relationship between supply and demand. Basically, when you have 0 to 4 months, we'll call it, of supply, that indicates a seller's market. 4 to 6 indicates a pretty balanced market. Over 6 months indicates, you guessed it, a buyer's market. We are nowhere near that territory yet. we do see that number continue to rise pretty much week by week for the most part. So again, we're seeing more supply on the market, more lingering on the market as there's less demand for those properties. So this past week was a 1.8 month supply of inventory, down from 2.2 the week before. But again, that was kind of an anomaly. I like to actually compare it to the week prior to Labor Day when it was 1.6. So we're actually seeing that number go up. Next couple measures, average unit or active units for balance. That just tells us how many properties need to hit the market to balance it out. And the percent of balance, same thing. We're going to skip over those. Days to equilibrium, same thing. We'd have to see a rise in inventory for 71 straight days in order to get there. Total showings. This to me is the leading measure amongst leading measures because showings today equal contracts in 2 to 4 weeks. So when we see the showing number go up, we see the contract number follow. When we see the showing number go down, obviously less homes are going to go under contract in the next few weeks. Okay, scrolling down, you can see that we started the year around 11,000, peaked out around 17,000, over 15,000 for a few weeks, and then that's been on the decline, 13,000, 12,000. We're in that 10, 11, 12,000 range now. Last week, 11,871, so just shy of 12,000 booked showings. And that equates to 1.9 showings per listing. At its peak this year, that number was actually closer to 4 and actually just above 4 showings per listing per week. Okay, showings to contracts, that's the amount of showings on average it takes for a property to get under contract. That number was 14.5. Median days on market, this one's an important one too. Obviously, the lower that number is, the faster moving and the hotter the market is. The lowest we saw this year was 5. That was in, mid-April. And you can see it's been on the increase ever since, with last week's number coming in at 16. Again, that's still a pretty fast-moving market. 16 median days, yet obviously 3 times that of the peak of this market earlier in the spring. Okay, percent decrease, percent increase, and no change. I've actually been reading into these numbers incorrectly, so I do apologize for that. That is not the percentage of listings on the market that decreased or increased or stayed the same. That's the percentage of the homes that sold or went under contract that had to decrease to get there. So last week, 38% of the homes that went under contract, which again was 816, had to decrease to get there. 2.2% increased, 60-ish% stayed the same. And the average decrease to get under contract for that 38% here was $42,000 and some change, equating to 5.4%. Okay, a lot of numbers, a lot of cells, a lot of colors. I know this can be maybe intimidating or overwhelming. And if I can kind of put tie a bow to it a little bit, we're seeing it's become more favorable to be a buyer week in and week out, essentially. We're seeing it less favorable to be a seller week in and week out. Now, that doesn't mean don't sell a home. That doesn't mean absolutely go out and buy a home. Obviously, everybody's situation is different. Everybody has their own motivation to want to be in the real estate market. Obviously, less people are moving in this environment than they would have when the rates were at their pandemic lows. We're never going to see those rates again. Not that today's 7.25, 7.5 rates are the new norm. I think it's going to be somewhere in between eventually. Yet, the people who are moving now are moving for a reason, right? Upsize, downsize, change commutes, change cities, whatever the case may be. There's still plenty of people moving, right? It's just not nearly the same as we can look into 2022, 2021. Those numbers look vastly different. Those markets were a statistical anomaly. So again, bottom line, less favorable for sellers, more favorable for buyers. Obviously, if you're doing both, if you have to sell a home to buy a home, it shouldn't matter at all because it's a straight up equity swap. Yet these are the numbers for the 7-county area that is the Denver metro. We can break these down any which way if you want to look at them at the level of your town, your suburb, your city, your block, your street, your house. Let us know because we will geek out over these numbers with you and just kind of help you out in your scenario, tell you what the numbers look like based on what you are looking to accomplish in the real estate market. If you do like this content, make sure to hit the subscribe button and hit that notification bell until it goes ding. And we do thank you for watching this. If you are watching this every single week, really thank you for watching it. I know it's not the most sexy content, except for me. I'd love to geek out over these numbers. However, we do appreciate your time as always, and thank you for watching. We'll see you on the next one. Take care.